Hey everybody, welcome to this training video. Today we're going to talk about the major market phases, okay? What are the major market phases and why do the major market phases matter? One of the things that I want to mention about the market phases is the market phases, it's the market's way of communicating what it wants to do. There's three major phases, but what we've got to understand is we've got to understand what the market is telling us and trade in the direction that the market wants to go. Again, this is just an overview on what are the major market phases. Okay, so for example, phase number one, the market is going up. Phase number two, the market is going sideways. Phase number three, the market is going down. There are only three phases, and what our job is to figure out what the market is doing, what it's communicating. Is it going up? Is it going sideways? Is it going down? So you guys know, let's say, for example, we have weekly key levels. These are our weekly zones. Now, let me get this to blue. Market phase one is the market is communicating an uptrend. And it does not matter what time frame you are looking at. If you're looking at the daily chart, the 4-hour chart, the 2-hour chart, the weekly chart, the market phase number one of an uptrend consists of higher highs and higher lows. And you can mark those on your chart. So when you see that, I'm not going to mark them all. We'll just kind of draw. Oops. We'll just kind of, sorry, let me just do that again. We'll just kind of draw it. That way we don't. So we've got a higher high, right? Higher low, followed by a higher high, followed by a higher low, higher high, higher low. That is an uptrend. So that is a market phase. So, looking at a chart, you have to decide, is the market in an uptrend? Is it sideways? Or is it down? Now, it's not always going to be as clean as this. This is where I think it gets a lot of people. The market can be really choppy. It can kind of do this, and this, and kind of pull back in here and go up and kind of go down like this. We wish the market gave us this clean structure like this, but you and I both know it doesn't always look like that. So this right here is still higher highs and higher lows. It's got a lot of little corrections in the middle, but in the grand scheme of things, it's still working its way up. And you guys know I talk about it a lot. One of the ways for you to easily identify is to draw that trend line. By drawing that trend line, it can help you see the uptrend better. So when it starts to do messy, go from your lows, your support levels, and draw that trend line. And then you can see it's a clear uptrending structure. Now, the next market phase is sideways. In a perfect world, sideways would look like this. Let me go to my blue marker. In a perfect world, it would look so clean like this, right? Now, you and I both know that's not always the case. But number one is the first indication that we're slipping into a sideways market trend is right here when you have an equal high. So let's see here. You've got this higher high. This is still a higher low, but when the price comes up right here and does not make a higher high, the market is starting to communicate that it wants to go sideways or into some type of consolidation pattern. Now, again, in a perfect world, it will look just like this, bouncing beautifully off of resistance down to support and just this beautiful channel. But this isn't the perfect world. You and I both know a lot of times it looks like this. right? This is more of the reality. Well, guys, this is still sideways consolidation as well. It's just got all these little hiccups in the middle, but ultimately, it's still not communicating an uptrending structure or a downtrend. It's just sideways. Now, again, it might not look exactly like that, but again, our job as a trader is to recognize these extreme highs, extreme lows down here, and decide what is the market communicating. So this is phase number 2, sideways consolidation, right? Other than higher highs and higher lows. So what is our third phase? Okay, again, we're just doing an overview here, right? Our third phase is market is going down. That is our third phase. So let's go back to our paint. So we had this uptrend, which we just talked about. We had this sideways consolidation, which we talked about. That's what the market is communicating. And then we're going to slip into a downtrend. The market is communicating that it wants to go down. That's the third phase. And what is our first clue that that's happening? When it breaks the sideways consolidation, it's breaking the sideways market structure. Remember, our job is to let the market communicate what it wants to do. We don't pretend that we know. We just watch what it does. Not what we think, not what we feel, but what we see on the chart. So when market structure breaks and then it comes back up right in this area and test, right? Because remember, it breaks support, and you guys know support is any area that the market goes down and bounces up, and it comes back and test right here. The market is communicating now that we are shifting to a downtrend as soon as that actually forms that price action signal. So the phase number 3 is a downtrend, and that is the series of lower highs and lower lows, right? And again, in a perfect world, it's going to look just like this, but you guys know this is not a perfect world, and it looks something like this. You and I both know this is what it looks like. It's not clean, right? You've got all these little hiccups in the middle, but once again, like I said with the uptrend, what we can do is we can draw that trend line. And the trend line connecting, in this case, connecting the highs or the lower highs, you know, again, it's not quite connecting here, but that can help us identify what if it's in a down phase. Trend lines are very strong to help you identify uptrends as well as downtrends. So we have a question really quick, and on the video, I'm going to answer this question. So one of the students right now is asking the question, drawing the trend line using what time frame? Whatever time frame you are looking at. If I'm looking at the daily chart, because remember, market phases can happen on a weekly. There's weekly market phases, but within the weekly market phases, so let's say this is the weekly market phase going up. Within this weekly structure are the daily structures, right? Okay, that's not the best looking, but my point is there's the daily time frames going on within the weekly time frames. And then you could even drop it down to the 4-hour, and there's all these time frames going on within that. So the question is, draw your trend line on what? Whatever time frame you are looking at. So if I'm looking at the daily and I want to know what is the market phase of the daily, I'm going to look at the daily chart and I'm going to draw my trend line. But if I drop it down into a 4-hour, it might look completely different, working its way up. So the market phases are different for the time frames that you're looking. But whatever time frames you're looking at, then draw your trend lines. You guys know from our checklist is we look at key levels, weekly, daily, right? We draw trend lines, we identify market structure, and then Fibonacci's and signals, okay? Let the market communicate what it wants to do. If the market is going up, let's recognize what that looks like on the chart and trade upside to the up. If the market is going sideways, let the market communicate and then make a decision. Do not rush into these trades. Be patient. Cycle 3, or phase 3 is the market down, right? Lower lows, lower highs.
If you'd like to learn more about trading options, I encourage you to check out my Options Elite Masterclass and all the bonuses that I'm giving away this month, like my TTM Squeeze course for free, plus that Forecast Pro indicator. I'm giving that away free this month to anybody who gets my Options Elite Masterclass. So check down below in the description if that interests you. Now, if you like the TTM Squeeze Pro indicator,